Okay, welcome back for the commencement of our third week of the channel. So just we'll go through the general market and the portfolio and the recent buys last week. So the Dow Jones, so this is a weekly chart. So over the last 3 weeks, it's just been hanging around, still within the upward channel. So if anything, if it was going to fall over, it probably would have fallen over. So the tendency is probably for an upside bias. Just for information, last week I uploaded a video on the analysis of the Dow Jones since 1920. So if you're interested, go have a look. But the long-term picture looks bullish. Okay, now we're looking at the NASDAQ, which is the technology index in America. You see, so Friday night basically just closed above, so looking like all-time highs. So it looks very bullish. So technology stocks should be strong. That's very bullish. Okay, gold. So gold I'd been bullish on for a couple of weeks from when I first started this channel. But now you can see just this last week it went up and it's come down. So that's a bearish signal. So it looks like gold's going to pull back down, which is why last week I basically cleansed all the gold stocks, because essentially this bullish move here, making all-time highs, did nothing to the gold shares. So what's going to happen is when the gold price comes down, the gold shares are going to get smacked. So I cleansed it and refreshed with a different type of shares. Okay, so going on to the portfolio. Oh, and by the way, I did put out a video midweek about all the changes that I'd made during the week. Going on to, so this is one that was just sold on Friday, one that actually hit our target. It had been a buy. We bought it here 2 weeks ago, and it hit our target. Just change this. So we were targeting up here, and so we sold there. So that was a nice 12%. So that was matched a previous high. I didn't think it would keep going. It hit above outside this channel. So, and what's wrong with making 12%? So I took that. Okay, so looking to some new purchases made last week. Just refresh that look. So this is Dicker Data. They're essentially you can see, a distributor of technology solutions to Aussie resellers. So I guess the theme around that for me is that AI is a big thing at the moment. So there's probably a lot of AI technology solutions that can be thrown out there to all the businesses. So you can see Dicker Data, go back to 2021. These two lines have sort of been over the long term where prices have like resistance here, support here, came back down. So it's sort of been an area of interest for the share, the price to move. So really what I'm looking for is another one of these moves. So see, we had a downward trend line and then a breakup. So essentially that's what I'm looking for here. We've got another downtrend line. So we bought it. So we've got to stop here. So we're risking 5%. And the target's up here. So we're targeting 14%. So up here, which is near the top of that channel there, and it's also a 50% retracement of the move from here to here. So if the price gets up there, we won't probably sell immediately. It just depends on what the price action does. So that's Dicker Data. Then lease. So this used to be the limousine of property construction globally. And basically, you can see there they've been smashed a few times, made a few bad decisions. So they're essentially, over the last couple of years, they've been restructuring themselves just to focus on construction and investments in Australia. So you could say it's, as you can see, this is 4 years of downward movement, but it was a premier stock back in the day. So you can see it's had this big downward trend line, and now I've got a shorter term downward trend line. So this is essentially the first higher high for a long time. And what I mean by that, you can see that's a bottom there, and this is a higher bottom. So you can see all the time the bottoms have always been coming down and down. So we're actually forming a nice uptrend. So we bought that, and it sort of flushed itself out and trimmed itself up to a fighting machine. So anyway, we bought it. So we've got to stop here. So we're risking 7%, but I reckon if we can get back up to there, so we're targeting 36%. So that's not a bad risk to reward. NEC. So there, well, they initially were Channel 9, I guess. So in broadcasting, publishing, digital media, and streaming services like Stan, and they own a large portion of Domain, which is a real estate internet sales platform. So they're sort of moving themselves away from the old television, because no one watches it anymore, to digital platforms, which is what, and as you can see, this is when digital started coming in. We all just watched YouTube and Netflix and whatnot. So it's just been advertising revenues have been lost. So again, a bit like the lease, they're reshaping themselves. So you can see back here, this is the sort of the price channel that sort of either it always comes back in or it breaks out, comes back, it beats support. So it's hit support, doesn't want to go down anymore. So what are we doing? We're risking 5%. So we're going to stop in here, and we're targeting up here at around that 50% retracement. So we're targeting 26%. Parenti, so we had already held, that was one of the first week purchases. So again, Parenti they're the channels where price sort of hangs around, either it becomes resistance or support. So we're not in a nice upward channel in the medium term. So in the short term, we've made our way above this resistance, come back down, tested it, didn't want to go down, so now it's on its way up. You see it's got these long candles, so it goes down during the week and then comes back up, saying last week came down, come back up. So that looks like it's ready to go. And what are we targeting? So we're risking 3% because we moved our stop just up to that orange line to make 12%. So that's not a bad risk to reward. Okay, SiteMinder we bought the other week. So this is a technology stock that listed back here in 2022. It's a sort of a platform that hotels use to get all their bookings done across a variety of different web channels. So basically it got smashed. So that's the high up here. This is where it fell out of bed really once it broke that level. You can see it became resistance here. Then it popped up, it went back up, nearly trying to break it, but no, it fell back down. But it's hit support. So we had a nice big green candle. So that's why we had a stop just halfway there. So I've now moved it up to there, and we're going to be targeting. So we're targeting up here, which is the previous high. So at the current days, with that stop, we're hardly risking anything. Targeting 10, but I reckon on this go it'll try and have a good crack at beating through that resistance. Sonic Healthcare. So again, going back over time, back to the 2020s, this is our sort of channel. That was either support or resistance. So Sonic Healthcare during COVID, so they're the ones that, when you have blood tests and all that, you send it to them. So they peaked during COVID because of all those stupid tests we had to do. Wear your mask, crap. Anyway, moving on. So we've got this downward channel. It's come back and poked itself above this old support or resistance. So once it breaks through there, I think she's off to the races. So again, on this one, we've got to stop just under last week's low. So we're risking 3 and we're targeting a 16% return. So that basically gets us up to here. And then once it gets there, it'll decide whether that's enough or it'll go through it. So we'll wait and see. Another one. So Sims. So they're in the recycling business, a global metal and electronics recycling. Again, historically, here's our sort of channels. Price runs around in. We've got our downtrend line. It's formed a nice uptrend line. So again, so we bought that last week. So we're risking 3%. We're targeting 12%. So again, just near that top line here, and at the 50%, near the 50% retracement. So that's a nice target to go for. Just 2 more to go. Technology 1. There is no historical horizontal lines. This thing's just gone up and up and up. We only started the channel 3 weeks ago, so I wasn't on personals there anyway. But I started 3 weeks ago, so I've got to start from here. But this is it's a good quality stock. So we're at this stage we're risking 3%, and we're targeting the top of the channel here. So going for 14%. So I think once it breaks through here, that it'll go. So with the Nasdaq up on Friday, this should be okay. And then the last one, Whirly. Okay. So again, Whirly's had a few hiccups, a few downturns. I guess historically, again, here's our 2 lines where prices. This is our resistance. When prices dropped below here, that became resistance. So as you can see, it broke up through here, came back, tested. So that's what a few of the other previous stocks are doing now. So it went up, but couldn't do it, couldn't break the high. So I'm looking for another one of these patterns where you can see it had the downward trend line there and then broke through and went up. So I'm looking for one of those again. made a higher bottom, so that bottom there is higher than that bottom. So I think if it just, there's a bit of resistance around here, as you can see, it's had a hard time getting through it, but I think this time it's got enough huff and puff. A lot of the time when it's like going sideways, it's like building strength. It's like doing weight training, getting ready for the big game. So hopefully it's ready for the big game. So we're risking 3% and targeting 10% up here. And again, we'll just see what happens when it gets there. It might go on. Or if it was looking weak, just take profits. Okay, so that's the there's a few other ones that are on the watch list that we haven't bought. James Hardy and South 32. So yeah, that one that looks pretty good too, but you can't buy more. But we'll watch. The other thing, not that it's the be all or end all, there's actually I'll talk about that when we get to it. So the stocks we're in, so Dicker Data is a strong buy. IMD, so that's one that we made profit on selling, was it 12%, I think. They had it as a sell, and I didn't think it was I thought it was a buy, so the brokers got it wrong on that one. Which is why I don't, it's just nice to have confirmation if you do have it. So James Hardy, they've got a strong buy. Nine's a strong buy. Parenti, no one covers it. You can see a lot of these Superfund Familiars, they're the ones I sold because they're the gold stocks, strong buys, but they're going to come down. SiteMinder's a strong buy. Sims a hold, Sonic's a hold, and Technology One's a hold. And Worley is a strong buy. So it's not, I don't make all my decisions on what they say is a strong buy. A lot of times they have a bias. And anyway, so if we look at how we went, so we come back to, I don't think I covered this, sorry. I did it America. So this is our S&P 300. So this is when you invest your money, when you tick the box in the Aussie share fund. Essentially what they're doing is they just buy this index. They don't pick and choose what shares. It's whatever this index does, it tracks what it does. So that's the objective of my whole channel, is to say that you can get involved and pick shares from the 300. You don't buy more. So I'm looking at holding around 10 of them. But as you can see, like we're looking for shares that are trying to make new highs. So these runs are mainly due to the banks, like Commonwealth Bank hit a record high the other day. So that's why I don't have any banks. So they're around their tops, very expensive. But anyway, so this index here is basically, well, here we go. So when I started, it was 8465, and that should be an 884. And on Friday it finished at 8488. So it's up 23 points. So it's up 0.3%. I don't think it's going to fall over, but I think it's just going to hang around here. Because the banks look toppy and the miners look sideways, so we're not full of technology stocks like that NASDAQ. So if we look at, as I said, I started a portfolio when I started this channel with 100 grand. So at the moment, so I took some profits, and we've got some unrealised profits. So basically we're at 101,406, so we're at 1.4%, so we're beating the index. And so these are all our current holdings that I've just run through. So that's it for this week. I'm pretty feeling good about what we've got there. So in summary, if you like what I'm doing, like, subscribe, send me some comments, feedback, or stocks you're looking at, but yeah, as I said, I'm trying to get people interested in, because all your super funds, whether in Australian super or some industry fund, they all let you buy stocks in the ASX 300. So all these shares you could be using your super fund money to deal with. Because not many people have, like a spare 10 grand outside of super, but a lot of people have 100 grand in your super. So rather than be passive until you get to age 65 and then go, oh, I wish I had taken a bit of interest, because it'll probably be the biggest asset for a lot of people, especially if you don't own a home. So yeah, rather than be passive about your super, get involved. So that's what I'm trying to do. Not here to try and make money out here. Not like when you really get into the share stuff, a lot of people charge you $2,000 a year. Then all they do is give you a list of 100 stocks and say, okay, well, these are the ones I think are good. And then you then leave it up to you to what you want to buy. So I'm trying to be honest and open with, okay, if you're starting your super fund today, these are the stocks that you potentially start with. All right, that's enough of that. I'll see you next week.